Nerina, well, we had a cracking session yesterday, a bit more tentative today. The JSE up by about 1/5% as we head into the afternoon. Yesterday, 2.7%, and it really seemed all to be in the back of those PMI and ISM numbers.
Yes, certainly the focus was on those US and Chinese numbers yesterday, but I think we today just seeing a lot of caution ahead of both the ECB decision today and then of course those very important US jobs data are tomorrow, because I think although the focus yesterday was on some positive news, it's almost as though this market I think is doing very much at the moment of that famous story of how a statistician, they say, sometimes use numbers. It's a little bit like how a drunk would use a lamppost. He uses it for support rather than for illumination, because what I find at the moment is the market is looking at numbers and saying where I can find the support for my view, I will only focus on those numbers. So when the market is positive, it looks for numbers that support its positive view, and when the market is negative, it looks for negative data. Why am I saying this? For the simple reason that both the Chinese and the US numbers were relatively positive yesterday. But if we look at other PMI numbers and manufacturing numbers, in the EU, for example, we're seeing numbers at 6-month lows. Looking at the UK, the lowest levels in 9 months. In Japan, the lowest levels in 14 months. So the market is very selective in what it focuses on and what it highlights in any point in time. So, really, if we have a reliable measure of forecasting what the market sentiment would be doing on a particular day, I think we'll have a much better way of actually determining what the direction of a particular day would be all about.
Just looking at that uptick in the ISM data out of the United States, I would be questioning what are these factories making, because people don't seem to be buying anything in the United States at the moment.
I don't know if we may be seeing a little bit of the Chinese mentality coming into the US system, where there's such support to create jobs and to actually create manufacturing that they might also be starting to manufacture goods just for the sake of manufacturing them, almost like we've seen in China, where they are just producing and just investing in infrastructure just for the sake of having those jobs on the ground. Because I do agree with you, when you look at the actual sales figures and you look at the rest of the economy in the US, it's hard to see where those manufactured goods are actually going to.
Well, if that ISM number gave a bit of support to the markets yesterday, do you think the ADP jobs report gave a bit of illumination into what we can expect tomorrow when we get those non-farm payroll numbers?
I think the market is very cautious about tomorrow's number because the latest jobs data that we've seen has not been very positive. So I think the market is expecting a bad number, and from that point of view, we often see that the market reacts to the reality rather than just the reality relative to the expectations. So if the number that comes out is bad, as long as it's not worse than is expected, I don't think the market will necessarily take that too negatively. But if it is worse than expected, I do think that we could have a bit of a sell-off tomorrow. The ECB decision today also will obviously also play an important role in markets, but again, I don't think it's just the rate decision itself that will be important, but a lot of attention will be paid to the rhetoric, to the view that is being painted, to the outlook that the ECB puts out with it. What is their view in terms of where they see the global economy going, where they see the EU growth opportunities going, and I think it's in that rhetoric that we will find more answers than just purely in an actual rate decision itself.
Well, among our biggest movers yesterday, we had Anglo Platinum adding a massive 6%. Well, for a share that size, that's a huge move. It's come back a little bit today. Obviously, they also had an announcement yesterday that helping to propel Anglo Plat higher.
Yes, it's certainly been the worst performer out of the top 40 stocks over the last quarter, so it did have to do a bit of catch-up. But yesterday's announcement of the joint venture that they've done with the Department of Science and Technology in government, as well as another joint venture within South Africa to establish a company called Clean Technology to provide clean fuel to the market, really wanting to capitalize on the government's intention to improve beneficiation within our metals and minerals sector. What they're doing is to bring fuel cells to the market, platinum of course being a very important input into that process, and they've recognized the extensive use that fuel cell technology can have in especially the telecommunications industry. It's already being used very successfully by some players in the telecommunications industry, where fuel cells are being used as an alternative source of clean energy to battery operated or diesel generators, and and I think it's specifically in this area that they want to make inroads into the market. The first part of this joint venture will be to establish distributorships and across South Africa, and ultimately to be followed in the second phase of an actual manufacturing and supply plant in South Africa. So the market really liking that news yesterday, and although today the share was slightly down and is now just slightly up from where it was, I think very good news for Anglo Plats.
Nerina, news out today, Discovery results, their profit from operations 36% higher at 2.5 billion rand. New business API, excluding Destiny Health in the United States, up 32% to 7.6 billion rand. It looks like a pretty good set of numbers from Discovery.
A strong set of results from Discovery. Very similar type of improvement that we've seen also from Metropolitan yesterday. In both cases saw very good operating results. Interestingly enough, in both cases worse than expected investment results. So the performance from the asset management side of things worse than the market expected. Also, if you look at the headline earnings, of course a headline is more an sort of an accounting number, and in the case of insurance companies not really very useful or relevant for them. So we prefer to focus on the embedded value numbers and on the operating profit, and in both Metropolitan and Discovery's case, very good set of numbers. Pru Health was the only area that disappointed. Great set of numbers coming out of Pru Life already, and it's great to see that Discovery continues to be the strong growth story and the innovative direction shower in the investment industry and the insurance industry in South Africa.
Well, Nerina, just when we think the rand is moving on to a whole new level, of course we had it trading above 740 earlier this week, it bounces all the way back to 727, 728 today, and it seems there's no stopping the rand, and particularly the investment flowing into South Africa that's helping to prop up the currency.
You know, Stephen, as so many times in the past, really the currency is really, we're at the behest of what the international investors do. And when we look at the inflows that we've had into our capital markets over the last 18 months, in the equity market around 100 billion rand over the last 18 months, in the bond market about 75 billion rand, and year to date certainly the momentum has been on the side of the bonds. Now, a lot of talk has been around this search for yield globally, and that's why when we often talk about the global risk appetite, you know, whether that determines whether we get inflows or not, and will we get an interest rate cut, and what influence will that have on our global flows, that is where the important thing comes from. We tend to focus sort of on nominal interest rates and tend to look at that and say, if we get another 50 basis point cut, will that mean that we'll stop having these inflows into our markets? What's a lot more important for the investor out there is the real level of real interest rates, and South Africa's real interest rates are at a very, very high level, close to 3%. That compares to developed markets at the moment that are all negative. So for the international investor, the South African real interest rates still represent a great opportunity, and that is why we are getting the majority of our foreign inflows into the bond market at the moment rather than into the equity market, where there is concern maybe about economic growth, and especially on a relative basis to other emerging markets, our growth picture is not that great. So if we look at what could potentially happen if we have an interest rate cut next week, well, it certainly won't change all that much in terms of our real interest rate, because our inflation outlook is still also on a decline. So when we look then at our currency and say, what will the impact be on our currency? Well, I think it's very likely that we will have an interest rate cut next week. Our real rates will not be significantly affected, and I think we will continue to enjoy the inflows into our bond market in particular for the foreseeable future. So yes, when we see the rand sort of moving up to levels like 740, we maybe think that there's a new regime on the go, but I think in the global context where we are looking at currencies that will probably be looking at competitive devaluation, I think in the case of South Africa, we will probably be one of the stronger currencies, and although that's not a great picture for our exporters or for our manufacturing, of course for inflation and for importers and often also for the consumer, that is a great scenario.